Welcome to a new Magic Indicator Strategies video. I am going to show you a strategy with which you can get an awesome win rate. This strategy will allow you to grow your trading account quickly or even pass tests for funding accounts. If you like the content of our YouTube channel, do not hesitate to subscribe and like the video. Just remember that you must have a good risk management rule, which is one of the keys for your trading to be profitable and consistent over time. And before showing you the indicators that we are going to use, I will explain the risk management rule. To trade, you have to know that managing your capital in each trade is very important. The best known and most effective rule is to risk 1% on each trade. In this way, you will be able to overcome losing streaks, which is completely normal in trading. Here is an example of a long trade. In the space that you give for the stop loss, you have to calculate only taking 1% of your capital. The calculation is different in cryptocurrencies, Forex, stocks, indices, futures. But on Google you can easily find position size calculators for each one. And the recommended thing is always to look for a take profit 2 times your risk or more. This means that you must earn 2% or more for each trade. In this way, if your strategy reaches a 50% win rate, you will be in profit because you have the odds in your favor. Perfect. I hope you have understood the risk management rule in trading. Now let's add our awesome indicators. First we have the B extender created by Quant Therapy. We leave it by default. I will explain how the indicator works. As you can see, this indicator shows you the general market trend with this histogram. And it also shows you with a small histogram and moving averages, the smallest movements in the market. And thanks to this we will have the signals to enter the market. However, the indicator will give you false signals when we are in a sideways market. So, to improve the inputs of this indicator we are going to add the Andean Oscillator indicator created by Alex Grover. We also leave it by default. So, this indicator shows you the bullish and bearish strength. When the red line is above the yellow line, it means that the market has more bearish strength, so we are going to take short trades. When the light blue line is above the yellow line, it means that the market has more bullish strength, so we are going to take long trades. Now I will explain how the strategy works. Let's see some examples of a long trades. Now we are in Tesla with a time frame of 1 hour. First, we need to see the Andean oscillator show us bullish strength. Second, the largest histogram of the B extender should show us an upward trend. Third, we should have a bullish signal on the B extender, represented by a green dot. So we take a long trade. We set our stop loss at the nearest swing low. And our take profit will be with a risk-reward ratio of 1 to 2. So, we see how the chart develops. It was a winning trade. And we can see that a few candles after this trade, we have another bullish signal, which meets the same conditions. First, the Andean oscillator shows us bullish strength. If you are in doubt because the lines are too close, enable indicator values. And then look at the values of the lines. As in this case, the light blue line is greater than the yellow one, it shows us bullish strength. Second, the larger histogram of the B extender is bullish. Third, we have a bullish signal on the B extender. So, we take a long trade. We set our stop loss at the nearest swing low. And our take profit will be with a risk-reward ratio of 1 to 2. It was another winning trade. Now we will see how to take short trades. Let's see some examples of a short trade. We are now in gold with a 1-hour time frame. First, we have to see that the Andean oscillator shows us bearish strength. Second, the largest histogram of the B extender should show us a bearish trend. Third, we should have a bearish signal on the B extender, represented by a red dot. So we take a short trade. We set our stop loss at the nearest swing high. And our take profit will be with a risk-reward ratio of 1 to 2. Let's see how the chart develops. It was a winning trade. Let's see another example. Here is another example of a short trade. Now we are in euro-dollar with a time frame of 1 hour. First, we see that the Andean oscillator shows us bearish strength. Second, the larger histogram of the B extender is trending down. Third, we have a bearish signal on the B extender. So we take a short trade. We set our stop loss at the nearest swing high. And our take profit will be with a risk-reward ratio of 1 to 2. Let's see how the chart moves. It was a quick and simple winning trade. Here is one more example of a long trade. We are now at SP 500 mini futures with a 1-hour time frame. First, we see that the Andean oscillator shows us bullish strength. Second, the larger histogram of the B extender is trending up. Third, we have a bullish signal on the B extender. So we take a long trade. We set our stop loss at the nearest swing low. And our take profit will be with a risk-reward ratio of 1 to 2. Let's see how the chart moves. And this was also a winning trade. I hope you liked this video, where you have learned how to manage your capital and how to apply a super profitable strategy. Now it's up to you to backtest this strategy and create your trading system. Until the next video. Happy trading!